now, right now. Right 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 now, right now. Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been getting bigger. Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest in everything crypto every single day here at 10 a.m. Eastern on the Crypto Jebb YouTube channel. If you guys are excited about today's stream, I want you to tell me in chat what you would like to see us talk about. But what we're going to be talking about in today's stream, because you can tell me what you'd like to see in future content, what we're going to be talking about in today's stream is the fact that Bitcoin has gone through a major rally over just the last couple of days. In fact, just over the last several hours, Bitcoin has rallied $2,000 after bottoming out around $27,000, rallying up to $29,250. And in this stream, we're going to be talking about why Bitcoin managed to go through that rally, what triggered that event, and we're going to be talking about where Bitcoin might be going next. If you're looking forward to today's stream, hit that like button, subscribe to the channel, and hit that post notification bell so you won't miss a single upload. And stay tuned because I've got a very exciting change of schedule coming next week, and it does involve more Climate of Crypto videos. You guys have been really enjoying those on Saturday. There's going to now be 2 of those coming out on Wednesdays and on Saturdays. Very excited about that. Got some more announcements in that direction over the next couple of days and weeks. But let's go ahead and jump straight onto reading chat. We just got started. We've already got nearly 200 people watching. Thank you guys for tuning in. Smash the like button if you haven't already. Alex Nibos in chat said, good morning. He was the first, so shout out to you, Alex. Daniel J said, hi. Good to see you, Daniel J. Jojo said, good morning. Good to see you, Jojo. Buckaroo 10 Eventer said, good morning, all. Diego Barrios said, Bedrock. Amen. MHMA7 said, lol, so much for that. Yes, there was a prediction, an open prediction of Bitcoin going through a large correction. Bitcoin has very clearly not done that, and we're going to talk about that because it's actually some pretty exciting news that Bitcoin didn't break as low as we thought it would. A lot to unpack there for sure. Let's go ahead and talk about that here over the course of the next hour. Crypto Mini Bike in chat said, good morning, everyone. Sean Galt said, good morning, Jebb. May the Lord continue to richly bless your family. Thank you so much, Sean. Queen said, let's go. Bedrock present. When people said, good day and God bless. Queen said, smash the likes. Drew GG said, I'm going to need you to elaborate on this one. Yes, the title did not update. Look at that. Let's just see if I can fix that. Bitcoin rallied. Give me 1 second, guys. That did not update. Yes, I am very sorry about that. That looks like it was throwing me an error. There we go. I was trying to say Bitcoin rallied $2,000 in just 24 hours. There we go. Good morning, Jebb. Good morning to you. Mike Lavery said, good morning, everyone. William said, hi, Jebb. Looks like a short squeeze. Absolutely right. I do believe that's the case. We've got Queen in chat. Grand Roofing Incorporated. Kenneth Quinn said, hey, Jebb, is this a fake out? Queen said, hashtag FinSolve. Absolutely, guys. Good afternoon from Norway. Aija Priadite. Yes, that's what I was trying to say. All right. Robert Casanova said, Jebb is back with more action than ever. Thank you guys so very much. Yes, we are going to be looking at quite a few different charts today to take a look at what is occurring on Bitcoin. And we're going to start by diving straight on into CoinMarketCap. So let's do it. All right. Bitcoin is trading at a very interesting level today. It is trading at $29,870. It is up 9.29% over the last 24 hours, up only 1.63% over the last 7 days. That's interesting because you don't see that happen very often. You don't very often see Bitcoin go through a major rally over the last 24 hours, but not over the last 7 days. That goes to show you that we've had this kind of U formation where Bitcoin dropped over the last few days, last 5-6 days, but now it's bouncing up and rallying above where it started the last 7-day period. Bitcoin is therefore up 29% over the last 90 days. Ethereum is up 21.51% over the last 90 days, and Ethereum is still up 7.25% over just the last 24 hours. Binance up 4% over the last 24 hours, up 4.57% over the last 7 days, up 12.59% in the last 90. XRP coming in with a rally on this news, up nearly 5%. Cardano up nearly 10%. Dogecoin up just over 5%. Polygon up over 9%, and Solana up over 8.5% on the day. Polkadot up to $6.20 at $5.66. Every single one of the actual mobile cryptocurrencies in the top 10 is up over 15% year to date. And if you exclude Dogecoin, which is only up 18% year to date, every single actual moving cryptocurrency, so excluding USDC and Tether, the two immobile cryptocurrencies, based on percentage gains or losses, the minimum that any of the cryptocurrencies are up in the top 10, again, excluding Dogecoin, is Polygon, and it is up 38.81%. That goes to show you the massive amount of explosiveness that's been happening in the cryptocurrency space over just the last 4 months. Now, I do also want to talk about the market capitalization, because with this move, something very substantial has occurred on one of the most important charts in all of cryptocurrency, and it's one that's not spoken about very often. That is the total cryptocurrency market capitalization charts. With this movement, Bitcoin and cryptocurrency attempted to break to the downside down below $1.1 trillion in total market capitalization. That failed. And over the last 24 hours, total cryptocurrency market capitalization rallied exorbitantly from 1.114 trillion all the way to 1.191 trillion, instituting a buy signal from LuxAlgo on the 4-hourly chart. And by the way, if you guys are not familiar with LuxAlgo, I'm going to show you today why it is such an incredible technical indicator and why you should absolutely get access to it. If you have not already, make sure that you sign up for it using coupon code Jebb, Jebb, 30 for 30% off at checkout. This buy signal on the 4-hourly chart gives us a great indication that a major rally is going to be coming soon to total. And following that, that confirmed buy signal, which happened right about here, we saw Bitcoin move through an explosive rally. That buy signal on LuxAlgo called this movement, and because it called that movement, if you're watching the market at that time, and because that market was also calling a buy signal over on Bitcoin, LuxAlgo was also calling was also showing a buy signal over on Bitcoin. We saw that there was a major rally starting that really just got carried away very quickly. There's a lot to talk about here. We're going to dive into all of it, but the first thing I want to show you is this total market capitalization chart. Turning off LuxAlgo for a second, as helpful as it is, I want to show you just the lines and the price action graphs for a second. Bitcoin was, total was bouncing off of its the bottom of its transitionary zone, which sits at about 1.125 trillion. That's around around $1.125 trillion. We saw a total cryptocurrency market capitalization fall down to that level and actually hit something that we would call the VRVP support. If I show you the VRVP, you're going to see that there's quite a lot of support in that region. If we just look at the log chart, and I show you that while there is quite a lot here in the transitionary zone, it starts picking back up right as soon as you hit the level that the total market capitalization went down to. You drop another like $30 billion, and there's a huge amount of support down there that the total market capitalization charts found support on, even going back to, I almost said last year, the year before last, January of 2021, about 18 months ago. That VRVP support has been absolutely pivotal in helping the total market capitalization charts hold up here in the transitionary zone. And with this bounce that Bitcoin and Ethereum both have instituted, we have seen a rally from the total market capitalization charts to punch straight through the top of the transitionary zone once again. In effect, if we show you this on the weekly chart, this is still a bearish engulfing candlestick and a non-bullish engulfing candlestick to follow. So this is not exactly the most bullish 3 candlestick in a row setup. But if you look at it without the context, you always want to look with context, but if you look without the without the, I suppose you could say, without the context of the fact that that's actually a bearish candlestick formation and you just analyze it from brass tacks, you see that what it actually means is that the total market capitalization charts came down here over the last week and started this week very low, right there around 1.125 trillion, and we bounced and we rallied straight back through the top of the transitionary zone. This shows you on the weekly chart, and even maybe on the 3-daily chart, be even easier to see. We broke through the top of the transitionary zone once, cataclysmically rejected. Now we are in the process of breaking back through it again, showing that we have therefore used the transitionary zone as a zone of support. Because this market broke through the top of the transitionary zone, came down, back tested it, and then broke through it once again, we now have confirmation that the well, not so much confirmation, but we now have more confidence that the transitionary zone is going to be used as a zone of support because we have just done just that. That is very exciting because when we look at this market, the cryptocurrency market, we look at this market through the lens of the transitionary zone and through the lens of the bull market, bear market structure as set up by the 4-year halving cycles. Remember, one of the biggest drivers of Bitcoin's value is not truly that it's going to be some world reserve currency. One day, maybe, Bitcoin will be used for an exceptional amount of transactions due to Lightning Network throughput, increasing the capacity of the Bitcoin blockchain. Maybe that will occur. Maybe. Bitcoin's true value proposition is to be a store of value. And that is the one value proposition in all of cryptocurrency that many people have trouble poking holes in. The one thing that people say to the idea of Bitcoin being a store of value is that the only reason it's a store of value is because you are putting money in, and if you actually make a profit by taking money out, then you're making profit off of selling to people that are buying in higher than you and will actually end up losing money. The problem with that notion is that that's how every market works. If you run under this assumption that Bitcoin's a scam, and because the only reason it has value is because other people put money in, and if you take money out, then you are necessitating profiting based off of the money that they put into the space because they're currently at a loss, then what that negates is that that's the way the entire stock market works. That's the way the entire any market works. There are many great arguments against Bitcoin and cryptocurrencies. However, there's not a great argument against that one. Bitcoin is well and truly the first hard money in the history of mankind. Full stop, period. I don't necessarily believe, in fact, I'll be very blunt, I don't believe Bitcoin will be the world reserve currency for reasons I can get into in other videos. That's not because I don't believe in Bitcoin, but that's because to be the world reserve currency, you need to be able to process probably somewhere between 3 to 10 million transactions a second. Bitcoin can process 7 to 10 a second. Bitcoin is not ever going to be a world reserve currency status, but if you compare it to something like digital gold, where people put their money in it to be a hedge against traditional currencies, the same way that they do with gold or with silver, then Bitcoin has a potential of being worth $10 trillion the same way gold is. Especially when you account for inflation, $10 trillion by the time we get there might really only be worth 5. Bitcoin could go to $5 trillion market capitalization based on our current value or even higher because it's a digital asset that also has this other massive industry around it. Therefore, I believe Bitcoin could easily go to $5 to $10 trillion in market capitalization. I don't think it's ever going to be the world reserve currency simply because I don't think it has the architecture to actually do that. That's not to say that a future cryptocurrency couldn't. I think it is theoretically possible, but I think the constraints of proof of work and the constraints of the blockchain's throughput would negate Bitcoin's ability to be the world reserve currency. That does not, however, stop it from being digital gold. It's very possible that 100 years from now, another cryptocurrency that is highly decentralized could take over and be the world reserve currency status and be adopted by an organization of nations in a similar way that the United States dollar is far younger than gold is in human transactional interaction. What I will say is that Bitcoin has a lot of value to it, and I think that us breaking through this level gives us quite a lot of confidence that Bitcoin is starting to turn $1.125 trillion into support, and saying, no, I think we will go into a rally to the naysayers. Let's take a look at Ethereum. Actually, let's start with Bitcoin. Over on Bitcoin, we have seen Bitcoin break through very strongly the transitionary zone over just the last couple of weeks. We're on the 3-daily chart right now. Bitcoin broke through the transitionary zone once back here on April the 10th. That was the day before our daughter was born. So that was a little over 2 weeks ago. That was 16 days ago. We saw Bitcoin rally up here on that weekly candlestick. From that candlestick, Bitcoin would rally all the way to nearly $31,000. Then it would drop all the way down to a very important level of support that we showed you in yesterday's stream. That was the 50 daily simple moving average. If you will see, I had a prediction that Bitcoin would drop down to $24,000 to about $26,000. It's very interesting to me that Bitcoin hasn't done that. And we're going to talk about why here in a little while. But I think the reason that Bitcoin has not done that comes down to the fact that Bitcoin came down here, tested the 50 daily simple moving average. We had this spinning top right here indicating indecision. Bitcoin during yesterday's stream, if you will remember, was threatening to break south from there very, very soon. Relatively soon thereafter, we went into a rally, of course. But while we were sitting down here holding the 50 daily simple moving average, something aggressive happened over as denoted on this website. This is coinglass.com/liquidation data. This website gives us a lot of information about liquidations of longs and shorts. So quite simply, because this is an educational channel, let me tell you what a long and a short is. A long is essentially when you buy low, sell high. That's pretty clear. Most of you guys understand what a long is. When we get to a short, that's where it can be a little bit confusing. A short, in essence, is where you sell high and buy low, or you borrow high and you cover low, maybe another way to put it. Essentially, a short works like this. You borrow capital, an investment or a derivative or a bond or something from someone else, in this case, Bitcoin. You borrow Bitcoin from someone and you sell it at market price. So you borrow it when Bitcoin is trading at $30,000 and you sell it there and take the $30,000 in cash out of the asset and you hold it in some kind of currency such as dollars, such as euros. Then you wait for the asset to depreciate. You wait for Bitcoin to go down to $28,000. Then with that $30,000 worth of cash that you have sitting on the sideline, you rebuy the one Bitcoin that you just sold and you have $2,000 in profit. Some of that $2,000 in profit goes back to the person you borrowed the Bitcoin from because they put it up for collateral. They want to make some money on it or else they wouldn't be lending it to you. And then you take the profit. They probably get 1% of that. So you give them $20. Whatever the number is, you walk away with $1,980 in profit. Again, because you sold one Bitcoin at $30,000. Then you bought back the one Bitcoin at $28,000. That meant that you spent $2,000 less dollars to buy the Bitcoin back. You give the Bitcoin back to the person you borrowed it from. Normally an exchange. They get a fee because you're using their assets, and then you take the profit. That's what a short is. And many people attempted to go through with a lot of short trades in many different points in history. If you guys have watched The Big Short or read The Big Short or know anything about what happened with the 2008 financial crisis, where there was this huge amount of greed in the traditional financial system, especially having to do with mortgages and mortgage-backed securities and the subprime mortgage crisis. If you know a little bit about what happened in 2008, then you'll also know about what happened with the short squeeze that took place. There were many people that bet against the housing market, and they made a lot of money doing it because they were betting against the economy succeeding on bad investment principles. The banks literally believed, and they were right, that they were so big that if they failed, then they would have to be bailed out. That's where the too big to fail idea comes from. And it is unfortunately a way that companies manipulate the government even to this day. Nevertheless, that's what a short is, and we have seen quite a lot of those as of recent. Looking over here on Bitcoin, plenty of people shorted this movement when we didn't hit our target at $32,000. Plenty of people shorted this movement. And in fact, I probably should have been more clear that if you were going to go into a short yesterday, you probably should have waited until we dropped below the 50 daily simple moving average. So I will tell you that's something I probably should have said, is that if we're going to go down into, and this is why people get on to me, they say, Jebb, why do you speak in if-then statements? It's because I want to protect people from things like what just happened yesterday. What I should have told you yesterday is the same thing that I tell you in all of these different YouTube videos that I've been doing, where I say that Bitcoin is going to do this if. Right? Let me show you. Over here on the channel. This will send Bitcoin to 32,935 in 11 days if. This will send Cardano to 77 cents in 30 days if. A clock will send Bitcoin to $50,000, and in that video I say if. The reason I say if is because I want to help you guys to not get burned. What I should have told you yesterday, and I will go ahead and freely admit this, I should have said that if we have a confirmed break below the 50 daily simple moving average, then this price target down here of $24,000 to $25,500 will come into play. That's what I should have said, and that's what I was thinking, but I did not convey that, and I do apologize for that. Nevertheless, Bitcoin has bounced here, and the people that shorted, unfortunately, did get liquidated. And we can see that took place over here. Come to CoinGlass.com. I would probably scroll down to the 4-hourly chart. You can see that we had, at this point in time, $33 million in shorts get liquidated at the 1600 hour yesterday. That led us into a major rally. That was the same point in time that we saw that Lux Algo buy signal. Again, on the 4-hourly chart, let's come down here. Take a look at Lux Algo. You can see that's this candlestick right here, that this liquidation right here took place on. We also saw that confirmed buy signal come in at that very same hour. Then we saw more liquidations coming into play over the last 8 hours. You can see those happening right here. At the 400 hour this morning, 4 o'clock to 8 a.m., we saw $30 million worth of shorts getting liquidated. About $10 million on OKX, $9 million on Binance, some on Bybit, some on Huobi, some on CoinEx. Moving forward to the 8 a.m. hour, this started at 2 hours and 23 minutes ago at the time of saying this. We have so far, anyway, had $44.91 million in shorts getting liquidated, $10.84 million in longs being liquidated as well. Notice the longs are picking up. The long liquidations are picking up. That's as a result of people longing this market, and now they're starting to get wrecked. That could be an early warning sign that this is about to fall over. Bitcoin could very easily from here fall down, backtest 28,545, and then continue its rally to the upside. Nevertheless, the 3 candlesticks that have driven this rally, all 3 of them correspond to 3 movements worth of $30 million to $33 million to $45 million worth of short liquidations each. This is categorically a short liquidation event. So that brings the question, how did those shorts get liquidated in the first place? This is where the argument of stop losses comes in, and this is where making a good decision for you can actually be a bad decision for everyone else. This is kind of an interesting concept, so track with me here. The reason that this massive short squeeze happened so quickly, in my understanding, is because when Bitcoin rallied up here just barely above this downtrend in its descending triangle pattern, that did give us a price target of $4,000. Of $4,000 lower down to $24,000 when Bitcoin broke above that uptrend for whatever reason. We don't know the exact reason. It really doesn't matter. The exact reason. It could have been manipulation, probably wasn't, probably was just genuine market volatility. There were a lot of people that had short liquidation prices or had their short stop loss prices at like $27,680. That means that many people that were in short trades believed that they had already made enough money here and they had very tight stop losses, or many people were entering short trades here because they were ready to bet against the bullishness of the market while Bitcoin would fall all the way down to $24,000. That is where, and I've talked about this in many videos, but I did not tell you this yesterday, and as I said, I should have. This is where we talk about in many streams, you wait for confirmation. Entering a short trade, I may have said this yesterday. I know I normally would have. This is where entering a short trade right here would have been a mistake. You would have wanted to wait for confirmation. And again, in this case, our confirmation would have been a break below the 50 daily simple moving average. The 50 daily simple moving average right here is very critical because it was the level that Bitcoin was founding itself on. There was not a confirmed break below the 50 daily simple moving average. A confirmed break below the 50 daily simple moving average likely would have looked like a breakdown to at least $26,700, if not even a little bit lower. Then that's where you would have wanted to enter your short. This is a classic example of people entering into short trades before it was time. Frankly, I wasn't really all that confident. I didn't think that we were going to break out today. I told you in yesterday's stream. In fact, I might even have a drawing of this somewhere. I told you in yesterday's stream that Bitcoin would probably trade sideways above the 50 for a few more days. So I thought I had more time to kind of prepare you guys for that, but apparently not. Bitcoin decided to go through a rally instead. Bitcoin broke above its downtrend right here on this descending triangle pattern. And on that descending triangle pattern, once it broke above that, even just slightly above that, one of two things happened to many people that were in short trades. Either people entered short trades up here and they made a lot of money, so they had very tight stop losses because they didn't care about losing out on those gains. They just were letting it ride as far as they could, right? They'd already made, with no leverage, they'd already made 12%. With 5x leverage, they'd already made 60%, whatever the number is. They weren't too interested in having a stop loss way up here because they already made a lot of money. They were content to have very tight stop losses and go ahead and get pulled out through a stop loss. Those are the people that probably triggered some of this initial movement, because when you have a stop loss on a short trade, then of course you have to put buy pressure. Remember that part of the short example, that short definition I told you earlier. If you borrow high cover low, you have to buy the asset back. That leads to buy pressure. So when you cover a short trade, that gives buy pressure, causing the market to move to the upside. Many people, it seems, either one, had already made a lot of money on a short, so they had a stop loss and they bought the market and covered themselves when Bitcoin went through a small rally, or two, and this is where the short trades came in that had just entered. Two, people entered short trades too early before the confirmation, and they got liquidated. So what seems to have occurred, at least from my understanding, is that a lot of people that had already made their money, they got stopped out because they took their profits and ran, and they were happy with it. On the other hand, people that went into a short trade too early, they were not following this idea of confirmation. Again, confirmation is something we talk about a lot on this channel. We have a whole video on it in Club DeFi, something I probably should have reminded you guys about yesterday. If you had not waited for confirmation and you entered a short trade right here before we broke bearish out of this symmetrical, this descending triangle pattern at least, or better yet, you waited until we broke below the 50 daily simple moving average. If you didn't wait for that confirmation and you entered a short, especially if you're on leverage, a lot of people are doing leverage shorts right now because they're betting against the market, then you would have gotten into a stop loss. Then you would have gotten into liquidation. And that's where the liquidations come in. This is not calculating and showing people that got stopped out of their trade. This is triggering people that are in shorts and long liquidations. That means they lost their entire balance. They lost their butt on that entire trade. That means that this just goes to show you how you have to be careful with liquidation. For Bitcoin to move only 3 to 4%, for you to get liquidated, you've got to be using at least 25x leverage. If you're getting liquidated in 3%, you've got to use 33x leverage. 2%, you've got to be using 50x leverage. Why? Because the way leverage works, think about this. There's a liquidation price. The exchange is never going to let themselves lose money. They're going to let you lose money because you're the one trading, but they're not going to lose money. When you're using leverage, whether you're in a long or short, doesn't matter. Same principle, just backwards, depending on which one. When you're using leverage, you are borrowing the exchange's money again. You're acting as a debtor. You're borrowing their money for the purposes of hopefully being able to profit more and then give them back their asset. You make more money. Everybody's happy. Well, if you were on, let's say, 100x leverage, if the market moves to the downside, if you're in a long, you're on 100x leverage. If the market moves to the downside 1% because you're on 100 times leverage, then you have actually lost all of what you put in, because you put in 1 Bitcoin, the exchange put in 99 Bitcoin. So if it goes down 1%, your 1 Bitcoin has now been gone. They're not going to lose their 99 Bitcoin to the market, so they'll stop you. So they'll liquidate you. You'll lose everything that you put into the exchange, into that trade. They'll keep their balance, the Bitcoin that they have, and then they'll move on and loan it to somebody else for liquidation. What seems to have occurred is that when Bitcoin moved 2% to the upside, everybody that was in 50x leverage got liquidated. Everybody that was in 33 to 50x leverage got liquidated. By the time it moved 5% to the upside, everybody who was in 20x leverage got liquidated. By the time Bitcoin moved 7% to the upside, you do the math, everybody who was in 10 to 15% leverage got liquidated, 15x leverage. So everyone who was using over 10x leverage got liquidated. And on top of that, if you're using 5x leverage and Bitcoin's moved, let's say 7.5% to the upside, then those people have already lost, 37.5% of their assets. So they're probably going to go ahead and exit that trade, contributing to more buy pressure. All of that to say that this was a cascading event of liquidations and stop loss triggers that led Bitcoin well to the upside. The question now becomes, can Bitcoin maintain this somewhat artificially high level? It's really not artificially high level because Bitcoin has earned its way up here. But we did get up here based on short liquidations and stop losses being triggered, not so much because of a certain buy or sell signal. Now, we did trigger a buy signal in this, so I suppose that's a factor now, but that wasn't what led to this rally. The liquidations led to the buy signal on Lux Algo. As you can see right here, that buy signal came into play during the middle of this liquidation event. Call the rest of it. That's great. But this buy signal was not what led to this rally. It was caused by this rally, and now it backs up this rally, but it did not initially cause this rally. So where does Bitcoin go from here? That's kind of the $69,000 question. Let's go ahead and read chat for a second, and then we will jump straight on into that question. Thank you guys so very much. We've got almost 700 people tuning in right now. If you guys are enjoying today's stream and enjoying the explanation of shorts, liquidations, longs, stop losses, all of that, consider hitting that like button and subscribing to the channel. Guys, the reason that I come here every single day and do coffee and crypto and make the climate of crypto videos and everything, the reason that I do all of this content is because I want to bring you guys something called financial sovereignty. And that is this very simple principle of you not being a servant to your money, but your money being a servant to you. That is the crux of how I believe finance should be looked at. You should not be beholden and a slave to your finances. Instead, they should be in service to you. That is my dream for you. And because of that, there's a lot of things I want to do in the future, teaching you guys about financial management, teaching you guys about financial planning, helping you guys to get out of debt, helping you guys to balance your own personal finances. There's all kinds of things that I want to do in the future to teach you guys how to be successful. Tell me in chat, would you be interested in content like that, where I teach you guys how to help get yourself to a place of financial sovereignty and then help get you to a place where you can grow your finances into the future, not just talking about cryptocurrency, but also talking about other investments such as stocks, talking about other ways of getting yourself out of debt, talking about things such as personal finance, personal budgeting. I want to help you guys with the whole picture, not just by teaching you charts. Now, that's something that I'm not going to jump into over the next 3 months or something, but I would like to kind of sprinkle a little bit more content like that in there, because if the vision for this channel, which it is, and I know it is to help you guys have financial sovereignty, then I have a lot bigger of a job to do than just doing technical analysis. That necessitates me being a lot more than a technical analyst for you guys. That necessitates me being a financial educator for you guys in everything finance. So tell me in chat, how are you guys, what are you guys thinking about that? RC Moore in chat. Good to see you, my friend. Thank you so much for tuning in. Said, did Lux Algo have a buy signal yesterday? Donated $2. Thank you. Yes, Lux Algo did have a buy signal yesterday, not on the daily chart, but on the 4-hourly chart. We're still under a sell signal on the daily chart. We'll talk about that briefly in a moment. But on the 4-hourly chart, we did see a buy signal from Lux Algo come into play just after this rally began. Lux Algo did not predict this movement because this was an unpredictable movement. This was a black swan event that took place as a result of a lot of people getting into shorts too early. And that's not really something that you can actually see in data. You just kind of always have to be prepared for that. Again, that's why I give you guys these if-then statements. If Bitcoin passes through this region, then a major rally will occur. I didn't give you that yesterday, and egg on my face, I should have done that. The if-then statement for yesterday, it was in my head, I just didn't tell you. If Bitcoin breaks with confidence below the 50 simple moving average, I kind of insinuated it, but I should have come right out and said it. If Bitcoin broke below the 50 daily simple moving average with confidence, then we would move down to the 25,236 region. That's not what occurred, and the reason we put those if-then statements in there is because we want to cover ourselves from things like this happening. This was not a predictable event. Why? Because this was entirely driven by people being over leveraged and in too strong of short positions. There's not anywhere that I know of that I can look at the data of how many people are in what short position. If you guys know where to find that data, then that's great. The only data that I have on short liquidations is looking into the past over here on coinglass.com/liquidation data, but that doesn't predict anything. That just tells you where we've been. That doesn't tell you where we're going. That is a history of where you've been. That's the ghost following you in Mario Kart single player, but that is not a roadmap and a GPS telling you how to get to Albuquerque, New Mexico. That's what I'm looking for. So if you guys know that, where I can find that information, then great. I would love to have it. But without that information, things like this are completely and totally unpredictable. You just have to make sure you are ready for them. Lux Algo, therefore, didn't predict this movement, but it did come in very quickly after the movement came in, confirmed the movement, and then backed up the rest of the movement. So that's the exciting thing about Lux Algo in this case. It did manage to give you all of that. It did manage to give you all of that information. Let's see. Colin McDonald said, all eyes and ears, Jebb. Thank you. Got to get back to work. Go well all. Thank you so much, Colin. Really appreciate you. Really appreciate you guys. Let's see. I have 7 pairs of shorts. There you go. Yes, the shorts got liquidated. Let's see. I'm in a 35x short on Bitcoin from 30K. Whew. Okay, so a little bit of a tip on you guys that are in massive shorts like that. Turns out, Sherman Nation, that was a great short that you went into. First of all, that's a giant amount of leverage to be using without a proper understanding of stop losses. And I don't mean to attack you, but if you were in that big of a short and you had already made a lot of money, because let's say you used $100 here. Let's look at this. over here on the chart. If you were at $30,000 and you went into a 35x short, by the time we got all the way down to $27,000, you would have been up 350%. If you had $1,000 in that short, which you may not have, I have no idea, you would have been up $3,500. If you're in that large of a short, then you need a proportionally sized stop loss. So whenever you're in a 35x short, it's very important that you have a stop loss that's proportional to that. Because if you're in a 35x short, if you move 1% to the upside, you are down 35%. So if you're in a 35x short, you need to be having like a 0.5% stop loss. And if you don't, you need to have a very good reason for that. So my friend, if you're in a 35x short on Bitcoin from 30K, I'm sorry to tell you, but I think you missed your opportunity to have a very tight stop loss. What you should have been doing is you should have been having a trailing stop loss of 0.5% to 1% at most, so that if an event such as what we just saw happen took place, you would be automatically stopped out and you would have locked in those gains. For example, if you dropped all the way down here, maybe 2% if you got this far. If we dropped all the way down here to $27,000, a 1% stop loss would have had you stopped out here at 27.4. So maybe you wanted to have maybe a 3 or 4% trailing stop loss. You would want to have a very aggressive, very tight stop loss when we're moving very quickly, but when we're ranging, you'd want to open it up, have a little bit larger of a stop loss. So instead of like a 0.5% stop loss like you would up here when you're very close to break even, you could then have a more general stop loss up here, trying to bet on that larger movement to get a larger drop. One thing you can often do is you can close the trade once the market starts trading sideways, reopen it if you think it's going to break to the downside just to cover your butt and get out of that uncertainty. Only be in the trade when there's a certain movement, and then get out of the trade when you're not in a certain movement. But from that point in time, if you're sitting down here trading between 27 and 28, then you might have had, if you decided to stay in the trade, I wouldn't have in that case, but if you decided to stay in the trade while we were trading sideways here, waiting on the next leg, then you would have potentially had a 2 or 3% trailing stop loss. That would have meant that if you moved 2% or 3% to the upside from the lowest low that the market went to, then you would have gotten stopped out, and you would have been stopped out down here instead of holding onto that short up here. You're still in profit if you entered in at exactly $30,000, but you missed out on a lot of profit because you had that massive amount of profit and then you missed it. It is best to use a trailing stop loss or to do it manually, have a manual trailing stop loss. Just say, hey, look, we made a lot of money. We're going to exit now, so that you lock in gains. It's much better to get a confirmed 100% gain than it is to bet on getting a 300% gain that you don't know is going to occur. It's also a good idea, if you are in a major movement like this, to exit during the sideways action, because that has been the end of the beat here. In theater, if you're looking at the in theater, if you're looking at a play, it's broken up into beats. In a conversation, whenever the conversation shifts from one topic to another, that's kind of a breaking point. In cryptocurrency, there are these breaking points identically between movements. And traditionally, those breakpoints happen whenever there is a shift in direction from down to sideways, from up to sideways, from sideways to up, or sideways to down. Those breakpoints are areas where you typically want to be entering and exiting trades. So here, you would have wanted to probably enter a trade here when we started moving to the downside, exit here. Then if you're trying to trade this upwards movement, you enter the trade here, exit there, but you're not in the trade while we're trading sideways, because there's no profit to be made while you're trading sideways. You're just exposing yourself to risk for literally no reason. So not to beat you up, but I'm hoping that will give you a little bit of support in your leverage trading endeavors there, Shermanation. Hopefully that was support. Hopefully that was helpful. My stop loss is break even. That is my margin is 5K. Okay, yeah, my stop loss is break even. Yes, that is the difficult thing. Oh, I see. Aha. So I jumped the gun. He actually entered that short earlier this morning. I see. Okay. Not bad. So you're up like 50% right now. Okay. He entered this morning. We did actually manage to touch. I didn't realize we had managed to touch 30K, but we did touch 30K. We touched 30K to 20. $30,000 and $30,020. So wonderful. Cool. Yeah, that's a completely different story. But for anybody who is in the position that I just talked about, and I thought Shermanation was in, just be very careful with that. All right. Just one more viewer, FoxP2. FoxP2, good to see you. Explain a trailing stop loss, please. Sure thing. A trailing stop loss basically acts like this. Let's say you have a $1,000 trailing stop loss. Let me try and explain this verbally. Bitcoin moves from 20. You enter a trade. You enter a buy trade. A long, let's say. You enter a long at $28,000. You have a $1,000 trailing stop loss. That trailing stop loss is initially going to originate normally. It depends a little bit on how the exchange operates, but it's typically going to originate at 27,000. Let's say Bitcoin then moves up to 28,500. Your trailing stop loss is going to move up to 27,500. The problem with that is that if you trigger that stop loss, you're down $500. So you entered at 28. The trailing stop loss then is therefore at 27.5. So let's say the market drops down to 28.2. You're thinking, oh my goodness, getting kind of close to my break-even point, which is 28,000. Trailing stop loss $700 below me. What do I do? Well, you could do a multitude of things. You could set a manual break-even stop loss. That's something that oftentimes you will do as a trader, is you'll say, I am not letting this trade go negative. I already got a little bit, and this is a really good rule, especially if you're a beginner trader. I am not letting this trade go negative. If it goes $1, or you might say, even if it comes within 0.1% of where I entered, then I'm exiting to cover the fee, because there's a little bit of fee. If you buy at 28 and then you sell at 28, you're actually losing money, even though it doesn't seem like it, because you have to pay the exchange something. So you could say, if I buy at 28, I'm not letting this market go below 28,150 without exiting, because I want to make sure that I'm not risking anything. Then you have the trailing stop loss on, and then let's say Bitcoin rallies up to $29,500. Then your trailing stop loss, being $1,000, would be sitting at 28.5. Well, you entered at 28, so that means you've got $500 of profit to play with there. As you start getting more and more and more gains, let's say Bitcoin goes up to 32, that's where you start narrowing and tightening that trailing stop loss and saying, okay, I'm already up a lot of money. I'm going to tighten that trailing stop loss, and I'm going to put it at $750. I'm going to put it at $500. If you're doing percentage, you might start at 4%. Then you move it down to 3, 2, 1%. And at some point, that trailing stop loss ought to trigger, and it ought to stop you out. And you ought to end up being pulled out of the trade because you let the trailing stop loss do the work for you. That oftentimes is a great way to preserve your wealth and not allow yourself to lose money in a trade. If you're entering a trade at the beat, so the moment when the market changes direction, when there's a shift in direction from sideways to up or up to sideways, whatever the shift is, there's 4 types. You move from the upside to sideways, you're moved from the downside to sideways, or moving sideways to up, or moving sideways to down. There are 4 types of beat changes. If you're entering at one of those and exiting at another, then you're typically going to always be in profit the entire trade. Because if you enter a trade and you're initially losing money instantly, then you should have tried to get yourself out of that trade as quickly as possible and wait for a better entry, because you're starting off the trade in red. You should never start a trade in red, and if you do, you want to get out of it pretty quickly. That's where you say, okay, I'm going to enter this trade. The market goes up 0.15%. I'm going to put my stop loss there, and if I get liquidated, boom, then great. I lost nothing. I made just enough profit to cover the exchange fee, so I'm good, but I'm not losing money. Oftentimes, if you are in that position where you would have lost money there, the market's already moving to the downside quite a lot. That's kind of what a trailing stop loss is, RC Moore. Hopefully that will be helpful for you. Now, Shermanation said, where should my first take profit be? That's a tricky question. What I would do for you, I would recommend, because you entered this trade less than 2 hours ago, or just over 2 hours ago, or excuse me, sorry, less than 2 hours ago, because that's when Bitcoin was trading up there at 30K. The thing you want to keep in mind, Shermanation, is that you are currently betting against the trend. The trend right now is aggressively north. There has not been a confirmed trend change right here. This is there's likely we will drop down to 28,545. That is not a beat change that's been confirmed. That is not a trend change that has been confirmed. Remember how I talked about there's 4 trend changes: down to sideways, up to sideways, sideways to up, and sideways to down. You want to put a trade in on one of these 4 beat changes. So far, Bitcoin has not even confirmed that it's trading sideways, and there actually are others too, because you can go from up to down or down to up. So there's actually about 6. We have not confirmed that any of these trend changes have occurred. You have not confirmed that this trend change has occurred. You have not confirmed that this trend change has occurred. These are the 2 that you'd be looking out for right now. There's no confirmation that we're plateauing and trading sideways now, and there's also no confirmation that we're topping out and going into a drop. There's no confirmation of that. So you're trading right now without confirmation. So you are trading some very risky business right now. It is possible that Bitcoin does go through a correction here, and it would make sense if Bitcoin did go through a correction down to 28,545, but you do not have confirmation of that. What would count as confirmation is if, say, Bitcoin dropped down here out of below the bottom of the reversal zone on the 1 hourly chart. What do I mean? Well, the reversal zone's right here. We blasted straight through it. Remember, guys, we're running this rally based on short liquidations, based on hype. You can stay in the reversal zone of Lux Algo for a long time. We don't know that we're done there. We could very easily go further to the upside, and you could get stopped out. So first things first, Sherman Nation, your best bet is to put a stop loss in place, probably a trailing stop loss, but at least a flat stop loss that will cover at least your fee. I don't know what the fee is for you. It's probably 0.15% on a lot of exchanges, somewhere in that region. The best thing you can do is not put your stop loss at break even, is to put it just a little bit lower since you're in a short, higher if you're in a long, lower since you're in a short, just a little bit lower. I'll give you an example. Doing some trading tips here today. Let's say you entered at 30K. This is an easier chart because this is on this is over on Bitstamp, so it's using whole numbers for some reason. Let's say you entered at $30,000. Your fee is 0.15%. You got a great entry, by the way. You're in a really good trade. Let's say the fee is 0.15%. This isn't exactly how you calculate it, but let's just go ahead and do it. Then you're going to go ahead and put your exit at least at $29,950. Because you want to be able to make enough profit to cover the exchange fee, so you're not, bleeding, a sixth of a percent every time you make a trade like this. The next thing you're going to want to consider is, am I happy with the amount of money I've already made? Considering I'm in a kind of a bad trade in a way because it's not confirmed. It's a good trade because you're in profit, but it's kind of a bad trade because it's not confirmed. You're not trading based off of any information right now. You're trading based off of a hope and a prayer that Bitcoin has topped out. And to be honest with you, the thing is, it probably has, but it has not been confirmed. And so that's where we can say, oh, well, it seems like this all day long until the cows come home, but that's not going to be very helpful for a trader when the market defies what you think it should do. And the market does that all the time. You have to wait for the market to tell you. That's one of the mistakes traders make, is that they go around and they try and tell the market, do this because you're overbought. And the market says, no, I don't want to do that because while I'm overbought, I've also got a lot of buy pressure. You wait for the market to tell you what it's going to do. You see the difference there? If you tell the market, you're overbought, go into a correction right now, the market's going to say, ha, that's funny, I'm going to keep moving just because I want to annoy you. Oftentimes, that's the way the market works. It seems like it's got an evil sense of humor. It doesn't, but it oftentimes seems that way. We can personify the market in a way that it shouldn't be. Now, there are ways that it should be because it's the manifestation of the machinations of the traders and investors. My point is, wait for the market to tell you what it's going to do. Right now, the market is not telling you it's going into a major correction on the hour or 4 hourly chart. It's telling you that it's in a massive breakout because of short liquidations. That's the last thing it told you. So that's what you need to be trading based off of. So considering you're in a trade that is not based off of what the market is telling you, but is based off of what you are telling the market, then I would say you've already done pretty well. And I would use a relatively conservative stop loss. And then, yeah, if you get confirmation after Bitcoin drops down to, 29.5, 29.4, 29.3, then re-enter the short. But there's nothing wrong with breaking up an entire movement into 1, 2, 3, 4, or even 5 short trades just to make sure that you're getting out of the trade when you're in those times of uncertainty, especially if you're using 35x leverage. You entered at $30,000, you're already up over 30%. I would use a very conservative stop loss, and then if you're going to short this market, wait for a better entry for that short. All right. Okay. Is now a good time to short? Exactly what I was just talking about. I said that after you asked, of course, but I think that it is I think that you need to wait for some confirmation before you do that. Personally. Can anyone read my comments? I can see your comments, The Optimist. You were saying it will dump. Yes, I did believe that it would dump, and the technical indicators were calling for that. Guys, this is one of the areas where I have to share with you guys and teach you guys something called the limitations of technical analysis. This is a very important thing to learn in any field that is projection based. Technical analysis is not like physics based, where you say the moon will be in this phase in the year 52,347 because we can predict the exact cycle of the moon, and I can tell you exactly the phase of the moon 50,000 years from now, because physics is 100% predictable. Markets are not. They are the manifestation of the machinations of the traders. Markets, therefore, can only be predicted. They cannot be proven where they will go. You cannot with any certainty guarantee where the market will go. And that's why I always, and I probably should have made this more clear yesterday, but I pretty much always, and I try to always tell you guys, if the market does this, then it will go here with a certain degree of likelihood. That's somewhat like what meteorologists do. And a lot of people say, oh my goodness, meteorologists, oh my goodness, hurricane warning, nothing happened. You're probably glad for the meteorologist when a hurricane smacks your town and you had 3 days heads up, right? You might get a false signal every once in a while, but you're glad that they have a job. I'm glad they have a job. I live in Florida. So I can tell you right now, I'm very happy that meteorologists get it right 70 or 80% of the time, even if they don't get it right 100% of the time. It's a lot more helpful than having no information. 150 years ago, you're just like, it smells different outside. Where are all the birds going? Oh my gosh, there's a Category 5 hurricane. We're blowing away. That's how it was before meteorology. That's kind of where you are without technical analysis. Technical analysis is not perfect. It cannot give you 100% of the right signals. But it's a whole lot better than having nothing. It's a whole lot better than getting smacked with a Category 5 hurricane and getting buried underneath your house because you had no idea that there was even one out there in the Atlantic in the first place. That's where technical analysis comes in. So the technicals yesterday were saying that if we drop below the 50 daily simple moving average, we likely would have dropped down to $25,236. That's not what happened. For reasons I talked about earlier on in this stream, we had a short liquidation triggered by people exiting their trades through stop losses and just through taking profit after they had made a lot of money on shorting that first leg to the downside from $30,000 down to $27,200. That's where we ended up having that rally. Alrighty. Markets cannot be predicted ever. Some people are just incredibly lucky, but people like Jebb can give you a very educated guess based on TA, not gut feeling. Yes, the thing is, there actually is a degree of intuition that comes into play. There's a degree of saying, something just feels different about that. There is a certain degree of instinct. Lions hunt based off of instinct. You should trade based off of instinct. That being said, you should be fact-based and fact-driven as much as possible. And the facts were yesterday, everything that I could see anyway, we're calling for a downtrend. But of course, there is always that chance that things could go opposite of the way they're predicted. Fatality donated €2 a while ago. I forgot to read this. Thank you so much. Said, Jebbs, can you look at Lux Algo, please? Much love and thanks, brother. Thank you so much. Yes, I've been looking at it quite a bit. During this stream, and it is definitely doing a very, very good job right now. All right. Just buy dips, hodl, and enjoy the runs, Cryptopher said. I totally agree. That is the best way to do it in a lot of cases. People forget TA is based on probability. Yes, it is absolutely based on probability. Sherman Nation said, thanks, Jebb. Of course, my friend. Hopefully that was helpful. Hopefully that was helpful indeed. All right, guys, let's see. We'll go ahead and read chat here for a few more minutes. Like I said, really appreciate all of you guys tuning in. As far as where Bitcoin's going next, I suppose we should talk about that for a moment. Right now, and this is one of the things I was kind of cautioning Sherman Nation about, Bitcoin is in a bull flag. Bull flags traditionally break up. And if they break up, your short trade is going to get liquidated. Or at least stop loss, and you're going to miss out on closing at a large profit. This bull flag here on the 5-minute chart would probably send us to at least $30,500, if not even higher. Looking at our main chart over here that we've been doing a lot of our analysis on, Bitcoin also at a buy flag, kind of an ascending trading channel right here, right below the 28.5 region, and we broke straight through it very easily. The fact that Bitcoin broke through 28.5 so incredibly easily makes this incredibly likely that Bitcoin is in a strong uptrend. I would like to see what Bitcoin does from here. If Bitcoin comes back and backtest 28.545, that's great. That's incredible. What I will say is that if Bitcoin does have a backtest and it doesn't manage to drop that far, it is also possible that Bitcoin is forming one massive, somewhat ugly, but definitely valid inverse head and shoulders pattern, as you can see right here. and then that could send us back to the upside. Guys, I honestly, one of the reasons I've talked a lot to chat today and talked a lot about trading today is because Bitcoin really needs a couple of days to kind of develop this market to give us an idea of exactly where it's going. What I will tell you is this: if Bitcoin did actually find a bottom here and it's going to go on a run all the way back up to new local highs and it only dropped down to 27,000, wow. That signals a lot of strength in the market, which short term is a very bullish thing. Long term, it could mean that the market is going to get exhausted, because the most healthy thing that Bitcoin could have done was dropping all the way down to 25,236. But again, we must remember not to tell the market what to do. We must instead listen to what the market is telling us, because that is the essence, the crux of technical analysis, is understanding what the market is telling you, because we are not in the driver's seat. We are simply trying to follow the market wherever it leads and make profit based off of it. I would love, in my own pride, to be able to say, market, go down to 25,236, bounce, go into a rally, it'll be better for you. It's not the way it works. Sorry. You've got to listen to what the market is telling you. You're not in the driver's seat. You are in the car behind Bitcoin, following it to money, to profit, to success. And if you try and get in front of it, then what ends up happening is it runs you off the road and you'll end up in a ditch. So stay in your place. I will stay in mine behind Bitcoin, letting it do the talking, let it do the leading, and we will follow it wherever it leads. Sometimes it's going to tell us one thing and then it's going to do another thing, because it's a little bit fickle like that. But in general, if you're paying close enough attention, it'll tell you where it's going correctly 70 to 80% of the time. The better technical analyst you are, the more experience you are, the more likely it is that you're going to be able to follow more and more of those signals. But sometimes, of course, just like so many people in Gainesville, Florida, Bitcoin forgets to use its turn signal. Let's read chat. Okay. Let's see. Jebb, you got my super chat. Fatality said, yes, I did. I actually did see that. Thank you so very much. Yes, as far as Lux Algo is concerned, we are looking for a confirmed buy signal tomorrow on the daily chart. That has not happened just yet, though. It is happening on the 4-hourly chart. If you don't have time to chart Algo, it's okay. Oh, you were talking about Algo. I thought you were talking about Lux Algo. Oh, can you look at Algo? Oh, my goodness. You said look at Algo. I thought you said Lux Algo. I might have to look at Algo another day, because we are running out of time. Will the real Cryptopher please stand up? We've got 2 Cryptophers in chat. That's funny. All right, guys. I really do appreciate all of you tuning in. If you did enjoy today's stream, make sure to hit that like button, subscribe to the channel, hit that post notification bell so you will not miss a single live stream. I really, really do appreciate all of you tuning in. Cryptopher, I have the Beholder, Fatality, Queen, Crypto G, all of you guys, thank you so much for tuning in. Like I said, I really appreciate all of you for tuning in and giving me your time. Hopefully I was able to impart some kind of wisdom or value onto you. That is obviously, and of course, our vision and our dream here every single day on the channel, to help you guys grow closer to financial sovereignty through every single means that we can equip you with. Thank you so much for tuning in. I am going to have to go ahead and wrap it out, but before I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling. Got a real good feeling.